1,000 tourists have left since the quakes began last week. Santorini sits atop a volcano that has not erupted since 1950, but experts say these quakes are not linked to volcanic activity. Cracks have developed in some buildings, but otherwise there has been no damage. Michael Wallace, CBS News.
This is an important notice to...
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
Is it Friday yet?
No, it's not even close.
It's
Fran.
like Friday.
You know, there's snow.
Eve.
There's snow tomorrow, too.
I know. Or it could be slush.
Couple inches of snow.
I love
a little bit of rain, too.
Yeah, that's when it just gets messy and gray in New York City. Anyway,
not great.
Happy Wednesday. All right, everybody, we're just about 55 minutes away from the closing bell on this Wednesday. Carol Massar, Tim Stenovec, live here in our Bloomberg Interactive Broker studio. And we've got stocks. We've got green across the screen. You are looking at stocks pretty much hovering near their best levels of the session. For the S&P 500, Tim, most names, 337 in the index higher today on this Wednesday trade.
Okay, a lot of people saw Moana 2. Were you one of them?
No. Did you see it?
I didn't. My wife and son went, and they saw it.
Liked it?
Liked it. Moana 1 was scary, so he was fine during Moana 2.
Okay.
A lot of people didn't quit when Hulu got more expensive.
Yeah.
The stock, it's down 1.7% right now. What we need to know about Disney earnings from Bloomberg Intelligence's Geetha Ranganathan.
All right, looking forward to that. Always love talking to Geetha. Hey, Ford reporting after the closing bell today. Lots of pressure on the company's EV business. And how about those tariffs, right? Think tariffs with Mexico or Canada, and then you think about the auto industry. We've got an interview with the Ford CEO, Jim Farley, that's coming up a little bit later on.
Okay, big business. How about some small business? A check on small business ahead of Valentine's Day. Christina Stembel of Farm Girl Flowers is stopping by. We always love it when she joins us. She's so candid.
She is so candid about running a small business. It's not always easy, but she made it through the pandemic and then some.
This is a $30 million business that she's bootstrapped, by the way. We're not talking like a farm stand of flowers here.
I just want to do flowers. No, it's a big deal.
It's pretty impressive.
All right, let's get a check on the trade today. See what Charlie Pellet has to say. Charlie, take it away.
Hi, thank you very much indeed. Looking at a mixed market right now with the Dow, the S&P, they're both higher. NASDAQ lower. 53 minutes to go until that closing bell. Clang, clang, clangs on Wall Street. Developing story at this hour. Sources tell Bloomberg SoftBank is in advanced talks to acquire Ampere Computing. Stay with Bloomberg. We'll get you more details as they become available. S&P right now up 12, 6,050 where we stand, up by 0.2%. Dow Industrials up 249, up 0.6%. The Nasdaq Composite Index lower by 5, little change, down less than 0.1%. 10-year 4.42% with the 2-year 4.18%. Gold up $20 the ounce, 28.63, up 0.7%. And West Texas Intermediate crude down 2.1%, 71.17 a barrel. Lots of tech earnings. Alphabet down 7.7%, AMD down 7.3%. As for the overall backdrop, Mona Mahajan is head of investment strategy at Edward Jones. And on Bloomberg The Open this morning with Katie Greifeld and our Tim Stenovec, she told us, no question, big tech is facing big headwinds.
Not only are they getting more competition from Chinese players, global players, we're also seeing the impacts of the trade war really impact those companies with global revenues in an outsized way. So tech falls into that basket very nicely. And of course, there's the ongoing valuation concern.
Mona Mahajan interviewed this morning on Bloomberg The Open. Coming up after the close of trading, we will be getting earnings from Qualcomm. For on-demand news, 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Disney shares have been bouncing around today. They were up as much as 4.7%, but then fell by more than 2%, now down 1.7%. This after the company reported adjusted earnings per share for the first quarter that beat the average analyst estimate. We've got with us Geetha Ranganathan, technology and media analyst for Bloomberg Intelligence. She's from our Bloomberg Intelligence headquarters in Princeton, New Jersey. Geetha, help us make sense of what happened here and why we saw some selling a little earlier in the session today. Some good news from Moana, good news in the box office, good news when it comes to the streaming service. What gives?
Yeah, this is a little bit of a head scratcher for us, Tim. So, really broad-based strength, and I think a very, very good start to fiscal 2025. The big numbers that we were obviously looking for was streaming profitability, and they once again delivered it. This was the third straight quarter of streaming profits. And then theme parks surprisingly held up much better than we were expecting. And even with the streaming subscriptions, yes, there were some cancellations, but it was not as bad as some of us were fearing. So all in all, it was a really good report. So I think what really happened is that the street was expecting a guidance raise. So remember, when they reported fiscal fourth quarter for 2024, they had issued 3-year guidance, and what they said for 2025 was high single-digit EPS growth. They did report for the first quarter, they reported almost 40% EPS growth. And I think on the back of that, some investors would have definitely expected them to raise guidance, which they didn't do. And so that's kind of where, what I'm thinking is playing out right now. So a little bit underwhelming in terms of setting expectations.
They have been, though, raising prices, right, of Disney Plus and Hulu streaming services. And what did we get in terms of color on that? Consumers holding up on that and staying with them?
Yes, they did raise, and it was a pretty significant price raise, Carol. So it was almost 15 to 25% across some of those products. And what they said is the churn or the cancellations actually came in much, much better than what was expected. So, if you look at some of the street estimates, they were expecting almost 2-3 million cancellations for the fiscal first quarter. It came in at a much more moderate level at about 700,000. But then going forward into fiscal 2Q, they do expect some more subscriber volatility. So it's going to take a while for that, just to steady a little bit.
Can we make a comparison in the direct-to-consumer business with Netflix at all yet? Do they hold a candle to Netflix?
They absolutely do. And I think whatever they're doing right now, they are definitely taking a page out of the Netflix playbook. So, whether it was introducing a product with advertising, whether it was cracking down on password sharing, which they call the paid sharing initiative, which will happen in a big way in the next few months. All of these things are kind of really just following Netflix's footsteps. And we are kind of seeing some tangible results. I mean, first of all, there has been an inflection, which is a really big deal. Mm-hmm. Of course, there is a lot of catch up here that has to be done, Tim and Carol, because you have Netflix churning out something like about $12 billion in profits this year. Disney is going to be at about $1 billion. So still a lot of catching up to do, but I think there is a lot of upside down the road.
Oh, just a little bit of a gap there. I kid. Hey, Geetha, just one last question. And we heard about the successor to Bob Iger. No, we did not. When do we find out about that? Or is he going to stick around even longer?
Is there another Bob coming?
Yeah, exactly. Yeah. You can apply, but your name has to be Bob.
Yeah, so he actually, his contract goes on through the end of 2026, so he still has a good 2 years. Now, what we've heard is that, of course, the succession, planning and succession search is going on in full swing. The candidate names so far are really only the 4 internal division heads. James Gorman, of course, is heading this whole succession committee. They've said that they're going to come up with the name in early 2026. So that continues to be, a top of mind issue for investors, but nothing more than that at this point.
All right, good to know. Disney shares, as we said, down about 1.6%. Geetha, thank you. Geetha Ranganathan, technology and media analyst at Bloomberg Intelligence out there at RBI headquarters in Princeton, New Jersey.
Well, Carol, as you pointed out to me earlier today, Disney has had its diversity issues. It's been targeted for such, and it's not the only company. Oklahoma, which is poised to become the first Republican state to try to use its influence as an investor to end DEI in corporate America, is targeting companies including Alphabet and Amazon in shareholder proxy proposals. With more on that, we have Bloomberg News management and diversity reporter Jeff Green joining us from Detroit. What is Oklahoma doing, Jeff?
Well, basically, they're doing what a lot of blue state funds have done in the past, and what regular shareholders often do is take a proposal directly to the shareholders and ask them to vote on it in hopes that it'll either change behavior at the company or at least put pressure on the company to pay more attention to their desires. And in this case, it's related to DEI.
I mean, why are they doing? Is it just because, it feels like the rollback out of the federal government, or is it because they've said financially it doesn't make sense to put that as a priority, despite we've talked for years about consultants saying otherwise.
Well, that is the impetus for all of these conservative proposals, is they think the companies are actually taking their eye off profitability by doing these DEI initiatives. That fiduciary responsibility is the most important thing. And when you start focusing on other things which they don't believe have a bottom line impact, then this strays from the corporate purpose, and companies should just get back to neutrality, stop having social purpose, and just make products or deliver services. And that's their argument. There is an ideological battle that goes on around this as well from both progressive and conservatives.
You do raise the point in your piece that progressive funds from California and New York for years have pushed businesses on everything from disclosing their greenhouse gas emissions to undergoing racial equity audits. What's a company to do under this type of pressure?
Yeah, that is the question. The companies are kind of got to, put the finger to the wind and try to decide which way it's blowing a lot of the time. More so than, necessarily the truly legal or financial question, it often becomes, a political marketing risk question, like which is the riskier behavior, to support DEI or not to support DEI, and that sort of math is changing at the moment. As you mentioned, the President of the United States is focused on it. And there have been questions about whether the business case truly was made, that in itself may have been something that was more about consultants than about true, math.
It's interesting, too. I think about, was it last month that Walmart, there was a group of shareholder activists that were defending diversity initiatives as a business necessity and were decrying Walmart's decision to nix certain DEI programs. So it's interesting kind of the ebbs and flows that are going back. But Jeff, you follow this, you track it day to day. I mean, are we increasingly just going to see this across companies in terms of the rollback and investors maybe pressuring them to do so? But having said that, internally, are some companies saying we may not put it out there in a press release, but we're still going to do these initiatives?
Well, it's always a question of what did companies really roll back? What are they changing? There's still a law that requires there to be a certain level of diversity in the company, or at least they can't just suddenly just all hire all white guys. There really is a requirement that to be fair, and the laws are pretty clear on that too. So you can't just abandon the idea. But I mean, Brad Landers and past New York City comptrollers would come to companies and say, if you don't do this, this thing that we want, it'll be a problem for you. And so this is sort of the conservative answer to that, to say, okay, well, there's going to be a problem for you either way, so you can't just go one direction. You're going to have to make a decision based on what you think the smart decision is. And with the President of the United States putting so much pressure on it, I think you're right. I think you're at least going to see performative changes in DEI to kind of stay off his target list.
Yeah, it's just another thing that corporations are dealing with. As you say, more than 30 corporations face attacks from conservative groups. Jeff Green, thank you. He is management and diversity reporter here at Bloomberg News, joining us from Detroit.
Okay, from one Jeff to another Jeff. Up next, we're going to talk IPOs with Jeff Grabo, U.S. venture capital leader over at EY. We have about, 40 minutes to go until the markets close. Yeah, 40 minutes. Stocks are flat.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story out of Google. Google said to be killing diversity hiring targets. This according to the Wall Street Journal. That headline right now on the Bloomberg Professional Service. The Journal cites an email to employees on Google diversity hiring. Again, headline right now, Google said to be killing diversity hiring targets. U.S. stocks are advancing. We've got 39 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ solidly in the green right now. S&P 500 index up 20 at 6,057, gain of 0.3%. We've got the Dow up 306, up 0.7%, and NASDAQ up 14 for the NASDAQ Composite Index, a gain right now of 0.1%. The 10-year 4.41%, the 2-year 4.18%. Spot gold trading close to a record now, 28.62 the ounce, up 20, gain there of 0.7%. And a retreat for crude, West Texas Intermediate down $1.50, 71.21 a barrel, down by just about 2.1%. As for the market backdrop and recent declines, Sitara Sundar is global equity strategist at JP Morgan Private Bank. She was interviewed this morning on Bloomberg The Open.
We are still constructive on U.S. equity markets, and we still see modest upside from here. We would be using volatility to buy the dip.
Sitara Sundar of JP Morgan Private Bank buying the dip, interviewed on Bloomberg The Open. Among the names reporting after the close of trading, we will be hearing from Qualcomm ahead of earnings. Qualcomm up by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Do appreciate it. Quite a bit of news in the world of venture capital. Cherry Ventures, it's a VC firm based in Berlin, has raised $500 million in funding. That's to back European startups that come in from our Bloomberg team across the pond. And the VC firm General Catalyst, Carol, check this out. They're getting into wealth management. They hired 20 former staffers from First Republic Bank. Remember, it's one of the casualties of the 2023 regional banking crisis to create a wealth management business. I wonder if you're going to be able to get those 2.5% mortgages that First Republic was known for.
Yeah.
Maybe the 1.9% that I've heard of.
Maybe not anytime soon.
No.
Jeff Grabo is with us. He's U.S. venture capital leader over at EY. He joins us here in our Bloomberg Interactive Broker studio. Hello, hello. We were remarking that it's been since pre-pandemic that you've actually been here in our studio. It's been a while.
Yeah, it's great to be back. Thanks for having me.
Well, it's great to have you here. You know, the M&A market has gone through a lot, just like the rest of the world, right? Through the pandemic, coming out of the pandemic, dealing with a higher rate environment after a very low rate environment. The cost of capital was nothing. How would you describe the venture world right now?
So it's a very interesting time in the venture world because the pace of change probably has never been greater. I was just up on Sand Hill Road on Monday with a top-tier AI investor, and he was remarking at how fast he's amazed at how fast things are going. And that's something that we kind of expect. And I'm drawing a lot of analogies to kind of what's happened in through the internet phase.
Is it really a fair comparison, do you think?
I think so. And is it exact? Time will tell. But there is so much change. There is so much. You take a step back and look at the big picture. What were we going to do on the internet? Well, we were going to do I was going to buy something. I was going to, catalogs. Oh, by the way, I would never have to make another catalog if I was a company. It was just, I would put it up there and then I would never have to reprint it. And if I wanted to just do it. But now you think about, 25 years later, if the internet went down, the economic engine of the United States runs and the world runs on the internet. So,
yeah. I was going to go ahead.
And so I think that has that same possibility in a lot of, with AI and some of the things that are happening now, but the stack is being built. And over time, that will grow up and build, and then it will collapse, but you'll have just much more efficiencies.
Who's the company that sends out that huge catalog, Restoration Hardware?
RH.
Yeah, we just got that.
Yeah, I know.
They went right into the recycling last night.
It's multiple ones usually, right?
Yeah, it was like they didn't get the memo of the 90s. Is it moving even faster, though, than... I talked to somebody today who's in the AI space, and he said, things move, we're talking 3-month increments for revolutionary changes here.
That's what it feels like. And it feels like it is faster. And part of that may be because of all the capital that's out there. We have multiples of capital that are available through the venture pipeline. The world has become flatter. You've got more international participation, both from an LP perspective, putting money into the pipeline, as well as direct investments. So it just feels like, yeah, and one of the byproducts of that has been, in 2005, there were 5,000 venture-backed startups. At the end of 2024, there are 55,000 venture-backed startups in existence. So a venture cycle is about 10 years. Do the math on that. You've got multiples of venture cycles in 20 years.
Is there a pets.com version of the AI era and exuberance?
Well, you're always, it's funny because you always, are we going to ultimately get...
Pets.com, of course, being...
A flop.
A flop.
You could say Webvan, too. Webvan is another.
There's many of them. Like, you just threw .com, right? And, there was just models that didn't have any kind of financials or profitability behind them. And it was just
There will be companies that don't succeed, but that's not necessarily just part of an era. That's part of the business. You think about, this is a portfolio management business, and I have to produce outsized returns on the amount of money that I raise if I'm a venture investor. Right. So I have to take some really big swings, and you know what? They're not all going to work out because we're making bets based upon what we know today. What is today will not be what happened. It was what is going on in 3 years.
So do we get a bubble?
There will be over
Have we kind
exuberance.
of had a mini one?
There will be over exuberance just because there's so much capital. Okay. But you never get advances without taking those kind of leaps.
What was the reaction on Sand Hill Road about DeepSeek?
Well, I think we can't really comment directly on companies, but I think at some point you see the technology wave happen where costs always come down, and you're always going to have to be dealing with cost curves. And so, as I was talking about earlier, you have a scenario where 30 years ago, you would raise $50 million to spend to start an internet company. Today, you can do that for $50,000, and you can do it on consumption on a swipe of a credit card, whereas before you had to add full cost of ownership. So you're going to see AI do that. That's why I talked about the AI stack collapsing. It's getting built up because it's being created, and then at time that will happen. It happened in networking with boxes.
I'm not asking you to comment on DeepSeek. I want to know how freaked out the venture capitalists are about the billions they've invested in the AI companies that seem to be less efficient than DeepSeek.
Well, we don't have all the information on what's really happened and what the ramifications are going to be. I think you, as an investor, you always need to be taking into consideration what you're seeing. So I think one of the things, that will be one of the things that may not have been talked about a lot is you'll see more open source view, because a lot of this stuff, a lot of the investments have been in closed environments, and open source is cheaper. It's cheaper to develop. It's cheaper to license. So that may be one of the byproducts. And if we've truly reached efficiencies, then you can start to build on top of that stack and start to build the pyramid up.
I mean, isn't that something venture capitalists do? It's about disrupting kind of the establishment. And already you might say that NVIDIA is the establishment or OpenAI is the establishment in AI. And so the expectation is that, sure, we're going to come across probably a model that costs a fraction of the existing AI build that we are talking about today. And who knows how long that takes, or maybe it's already happened. We don't know. You're right. DeepSeek, we have to find out a lot more information. But is it kind of the venture perspective that, of course, we're going to find probably a faster way to do this, a cheaper way to do this?
That's always, if that wasn't that proposition, there wouldn't be a venture business. It's innovation, it's driving change. And so,
does that mean investors, the established investor who has plowed a ton of money into NVIDIA, and NVIDIA so dominates the market that there's a possibility that they're not the ones who dominate going forward?
That also may open up opportunity because, think about, we're early. When you think about the visions that have been painted out, and I was talking about this morning, there was a talk a while ago about internet first, the first people who are the internet first workforce. Well, just think what happens when you get the first AI workforce and what the capabilities that they have. A lot of the stuff that they will be using, I'm talking 20 years from now, haven't been built today. That needs to get built. So, but you need to have foundation, and you need to have that foundation and infrastructure laid. It's the same thing, the other analogy to look at is internet building, if you remember during bandwidth, everybody said, oh, we have so much bandwidth. Overbuilt bandwidth, we'll never use it. Well, guess what? We burned through that usage in a fraction of the time anybody ever thought it was. So oftentimes when you find you have abundance and overbuild, you don't necessarily have that in these technology markets because it gets used up, and that is also the mother of invention and innovation.
Where's the money going now?
So obviously AI is taking up about 40%.
What kind of AI though? Like what?
Well, obviously we've seen a lot of foundational model things. We've seen some open source things, starting to see applications going after professional services. We had that conversation earlier this week on Sand Hill Road. The other thing with the classification, it's going to be, that's going to be a little squishy because right now, if you're not, we are in a have and have not environment. I talked about the 55,000 venture-backed startups in the world. Half of them haven't raised, about half of them haven't raised in 3 years. So you're going back to market in an AI market and having to sell a story. So you're going to have to pivot. So a lot of people that may not have been AI native companies now are positioning themselves as AI companies. So you're going to see that number influenced by that.
I mean, how many of them are of those? They have to go back for more money, right?
Yes.
I mean, they're not ready to go public. They're not ready to what have you. What kind of money is out there?
So in that 55,000
to invest?
So dry powder is about 310 billion.
How does that compare with where we've been? I don't know, the last couple of years.
It's about par. It hasn't grown substantially because
interesting.
the past couple of years have been down fund formation years, and it kind of dropped. It lagged the investment cycle by about a year. So in 2022, things slowed down in venture and the investment side, and then 2023, the formation side started to slow.
Right.
But 2024 was an up year for the first year in 2 years on a investment into companies.
Last year.
Yep.
Okay.
Do you use AI in your job?
Yes, I do.
How do you use it?
I use it to help distill information. We've got something called EYAI that basically it's kind of our large language model that we help feed information into.
So essentially, I'm guessing it's built on a LLM, like an OpenAI, for example, ChatGPT. It's built on something like that, and you copy and paste a large document into it and get it summarized. How do you do it?
Summarization, helping to analyze. A lot of it's, how do you prompt in? That's a key of how you can help get better value out of it is, what are the questions? And it's funny, it used to be, now our tagline is all in. It used to be ask the better, one of the things on our EY Private is ask the better question.
Yeah,
and if you
become a better prompt engineer,
and
right?
so if we ask the better questions, that helps, distill. And that's actually, when you think about the AI workforce, that's going to be critical thinking is going to be something that's very important.
We were talking to Mandeep earlier from Bloomberg Intelligence, and we were off mic and we were talking about AI, and he was saying, everybody who, you have to embrace this stuff. You have to experiment with it. If you want to understand the technology, you got to start using it.
Ethan Mollick, who we have had on, he's author of Co-Intelligence, Living and Working with AI. He's basically like, if you haven't been working and playing with it, you are behind the curve in a big way.
I'm telling you, that chicken marinade.
And by the time you see it, it's too late.
Yeah.
That's the thing. That's why you have to be ahead of the curve.
Playing with it on my phone a little bit. Jeff Grabo, thank you so much. U.S. Venture Capital Leader at EY, joining us right here in our Bloomberg Interactive Broker Studio.
Hey, we got less than a half hour to go to the close of trading. Let's get an update. Here he is, Charlie Pellet.
Hi, thank you very much. Indeed, a lot of green on the screen here. 25 minutes to go ahead of the closing bell. Qualcomm earnings coming up after the close of trading. MicroStrategy as well will be all over those numbers as they break. Right now, the S&P up 17, 6,054, up by about 0.3%. The Dow up 309, now up 0.7%. NASDAQ little changed, higher by just 2 points. The 10-year 4.41%, with the 2-year that's currently yielding 4.17%. Spot gold up $22 the ounce, trading at a record up 0.8%, and West Texas Intermediate crude oil now down 2%, 71.22 a barrel. Bitcoin up by 1.1%, 97,597 on Bitcoin. So again, recapping, stocks in the green for now. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Once again, check out the stock market. Charlie giving us an update there. Carol, we are flat. It's yellow on the NASDAQ. You don't see that every day. It's not red, it's not green, it's yellow. 0.3% to the upside on the S&P 500, 0.7 on the Dow to the upside. Let's drive to the close and get an idea of what Jeanette Garrity has to think about these markets.
Yeah, exactly. She's managing director, chief economist over at Robertson Stephens, a wealth management firm with more than $7 billion in assets under management. And she joins us on this Wednesday from Menlo Park, California. Jeanette, good to have you back here with Tim and myself. A lot coming at investors right now. We are seeing stocks, though, pretty much at their best levels of the session, but just a little bit higher here. How are you looking at this investment environment? Are there more opportunities or more reasons to be cautious?
Well, there's a lot of opportunities, and I think your previous speaker was highlighting some of them. There's a lot going on. Sometimes there's a little bit too much going on. I think that's been maybe the story of this week. And the markets appear to be, and I think most investors are sort of saying, okay, let me focus on the fundamentals as they are and look forward. And the economic fundamentals are very good. It's an economy firing on all cylinders right now, and I think that's carrying through on how people are thinking about the immediate opportunities. Having said all of that, there is risk here that things get disrupted, even sometimes just by the things that are talked about. One example of that would be, the manufacturing sector is now growing again. It's actually been in a bit of a slump for a couple of months, as indicated by the purchasing managers' indices. And now it's picking up, and you can see things picking up in January. What remains to be seen is to what degree things kind of come to a stop for a minute while people try and figure out what the real substance is in the discussion of tariffs or anything else.
That's what we're trying to figure out right now. I mean, I was joking earlier today. It's like, is it only Wednesday? Because it feels like we've been talking about tariffs for 2 weeks at this point.
Well, we expected it on day one because that was such a big part of his campaign, right? And then when it didn't happen, we were kind of like, wait, what's going on?
What were your clients doing on that? Were they calling you Monday? Were they calling, trying to figure out, okay, what's going on here? Or is everybody, because they've seen this movie before, they're just like, okay, sit back and we'll wait to see what he does?
Well, to a certain extent, they've seen this movie before, but not quite in this way. And so, I think most of our clients, we were talking about to them about this some time ago, per the point that this should not be entirely a surprise. The speed, the magnitude, the lack of clarity as to what the objective really is, I think, is what surprised people. Yeah. As they say, if we can understand why this is being done, then that gives us a certain amount of sense of certainty. But that's been hard to absorb. But there's not enough there for them to be worried about yet. They're just a little bit worried.
All right, Jeanette, thank you so much. Jeanette Garrity, she's managing director, chief economist at Robertson Stephens. As we said, stocks pretty much hovering near their highs of this session. All right, right now we do have Donald Trump in the East Room of the White House. Let's take you there.
It's about time. Under the Trump administration, we will defend the proud tradition of female athletes, and we will not allow men to beat up, injure, and cheat our women and our girls. From now on, women's sports will be only for women. But before going further, I want to share some very exciting news from our military. After years of shrinking force numbers at levels that nobody has ever seen before, 4 years of this we went through, and missed recruiting targets every single month, it was just announced that in December, the U.S. Army had its single best recruitment in more than 15 years. Thanks. Every single day, nearly 350 new soldiers enlisted to defend our nation, and they're very, very happy to have done so. We've done lots of interviews, and we asked why this was taking place now, and they just said there's a spirit about our country that they haven't seen in many, many years, and I happen to agree with that. But it really is clear proof that the spirit is sweeping our armed forces, and we have a great leader in Pete. As you know, we all know Pete so well. He's going to be fantastic, and so many of our great heroes, and people are starting to understand what hero is all about. So that is something that is very important. We've gotten the woke lunacy out of our military. And now we're very importantly getting it out of women's sports. That's taking place very strongly. So in recent years, the radical left has waged an all-out campaign to erase the very concept of biological sex and replace it with a militant transgender ideology. You've heard a little bit about this, haven't you, huh? Just a little bit? Does anybody agree with them? No. It would be not a good thing to say yes right here. Female athletes have been forced onto the front lines, and men claiming to be girls have stolen more than 3,500 victories, that's a lot, and invaded more than 11,000 competitions designed for women. Last year, a male cyclist posing as a woman competed in the 800-mile Arizona Trail Race, a very big deal in cycling, and obliterated the women's course record by nearly 5.5 hours. Sounds like a lot, doesn't it, huh? 5.5 hours, but you have to hear the weightlifting records. You think that's bad. The weightlifting's worse. In 2023, a man in women's powerlifting broke 2 world records and outlifted his closest female opponent in one event by 440 pounds. And they continue to defend themselves, Mr. Congressman. You know that, right? They continue to defend themselves. We hope they continue onward because I don't think we can lose a race. This was one of the big reasons that we all won, and it's one of the big reasons that we had a record, a landslide like they haven't seen before, very often anyway. And who could forget last year's Paris Olympics where a male boxer stole the women's gold medal after brutalizing his female opponent so viciously that she had to forfeit just after 46 seconds, and she was a championship fighter. And actually, they had 2 women or 2 people that transitioned, and both of them won gold medals, and they won them very convincingly. But all of that ends today because with this executive order, the war on women's sports is over. Should have been done long ago, actually. Thank you. Thank you very much. With my action this afternoon, we're putting every school receiving taxpayer dollars on notice that if you let men take over women's sports teams or invade your locker rooms, you will be investigated for violations of Title IX and risk your federal funding. There will be no federal funding. So this will effectively end the attack on female athletes at public K-12 schools and virtually all U.S. colleges and universities. I don't think we've missed anything, but if we do, we'll make it up very quickly with an order, and I don't think we will at all. I want to, before we go on, I want to thank so many people that have worked so hard in the political establishment, and they're before me largely, and I think I'm gonna miss a few. It always happens when you do this, but it's just one of those things. But we have many senators here, many governors here, many state attorneys generals here. They're all over the place, actually, I see. Some of them went after me, but they failed. And they're really friends, and they're friends of women's sports, that I can tell you. So Senator Marsha Blackburn, where's Marsha? Hi. Senator Katie Britt. Thank you, Katie. Mike Lee, where's Mike? Mike. I love his new haircut. I love that haircut, Mike. He just said the hell with it, right? I think you look great. Senator Cynthia Loomis. Cynthia, where are you? Cynthia, hi, Cynthia. Doing a good job. And Roger Marshall. Thank you, Roger. Great. Mark Wayne, Mullen, Oklahoma. I love Oklahoma. I don't know what it is, Oklahoma. I won 77 out of 77 counties. It's never been done. Second was Ronald Reagan, 56, right? Yeah. And Tommy Tuberville, a great coach. You know, his quarterback was named Mahomes. He was a great college coach. And I said, how good was he? He said, you don't want to know how good. He made me into a great coach. He's pretty good quarterback, right? Yeah, he was very good. He's a good guy, too. Also, governors, we have Governor Glenn Youngkin, Virginia. Thank you, Glenn. Good job. Bill Lee of Tennessee. Bill, thank you. Jeff Landry, Louisiana. Thank you, Jeff. Kim Reynolds of Iowa. Thank you. We're trying to move, you know, education back to the states. You do know that. We're making a big move, and we're counting on Linda McMahon. Linda McMahon. And sitting next to you is the new Star is Born. Caroline, congratulations. You've done great. New star. Star is Born. Patrick Morrissey. Patrick, congratulations. Great race. A great friend of mine, and he's really helped us at the border, done a great job, of Texas, Greg Abbott. Thank you, Greg. Jim Pillen, where are you? Jim, very good, very good. Are you feeling good? He had a bad fall. You doing all right, huh? Good, you look great. Brad Little, Brad, thank you, Brad. Good job. Good job. Do you like education going back to your state? You'll make it top, right? You know, just so people understand, in the education world, we're ranked very, very poorly. We're 38, 39, and 40 out of 40 countries. We're at the bottom of the pack almost always, or very close to it. That just came out. We're 40 out of 40. And if we move it back to the states, I will guarantee you that if you take Idaho, you take Iowa, you take almost any of the states that I'm looking at right now, they'll be as good as Norway. You have Sweden, you have Denmark. I must say you have China that's very high in the pack, which is no longer, we can say it has to be a small area. China is very big, but they do a very good job. But we'll have at least 35 of our states that will be as good or better than any of those countries, and we have to get it done. Attorney General Steve Marshall. Steve, thank you very much. Steve, wherever you may be. General Tim Griffin, thank you. Thank you. A person who was so wonderful, Brenna Bird, where are you? Brenna Bird. Thank you. She supported me before people wanted to support me, right, Brenna? Wow. Thank you very much. I appreciated it. Andrew Bailey, great job. Where's Andrew? Great. Stand up, Andrew. One of the great attorney generals. Thank you very much. One of the greats, really. And Jason Mieres. Thanks, Jason. And now we get back to our members of Congress, and we'll go quickly, but it's a great group of people. Steve Scalise is right in front here. What a brave guy Steve is. Steve went through a lot, and he proved one thing to me, only one thing, that his wife loved him. His wife loves him because I went to the hospital that night, and he was not given even a shot, right, Mike? And I was with him, and I was with his wife, and she was devastated. She was really devastated. And I've been to, similar situations, not quite as bad, but the wives were not so devastated. And I can tell you that great wife of yours loves you. So anyway, and what you've done is incredible. The way you've come back, it's you look better now than you did before it happened. But nobody wants to go through that. Yeah, it's amazing. Tom Emmer doing a fantastic job. Thank you, Tom. Great job. Lisa McLean. Lisa. Hi, Lisa. Hi. Good job. Virginia Fox. Hi, Virginia. Tim Wahlberg, Michigan. Tim, great. Jason Smith, great man on taxes. Great man on how are the taxes doing? Okay. We're going to get good things passed, I hope, right? Juan Ciscomaris, Arizona. Where are you, Juan? Hello, Juan. Stand up, Juan. You look so good. You always look good. Kevin Kiley. Kevin, wherever you may be. What happened? How come he had no applause? Lauren Boebert. Lauren Boebert. Very much a leader in this. Thank you, Lauren. Kat Kamek, Florida. Thank you, Kat. Byron Donalds. He's doing good. Byron's doing good. Where is he? You're doing good, Byron. Laurel Lee. Thank you, Laurel. Thank you. Great job. Anna Paulina Luna. Thank you. Thank you, Anna. Greg Stubbe hit a home run wearing a Trump cap. The only one to hit a home run out of the park during your crazy baseball game, right? I think I will come. I think I'll come. If you're playing, I'll come. Somebody that's very shy. This is a very shy person, and but she's trying to break out of it. Marjorie Taylor Greene. Victoria Sparts. Thank you, Victoria. Great job. Ashley Hinson. Ashley, thank you. Marionette Miller Meeks. Good job, you did.
All right, everybody, you have been listening to President Donald Trump. He's in the East Room of the White House signing or will sign an executive order that prevents transgender women from competing in female categories of sports. At the point, what you've been listening to is certainly the president thanking various people involved in either bringing this to light or kind of getting into some of the specifics when it comes to this executive order. So certainly check out the Bloomberg or go ahead to our website, Bloomberg.com, for more details on this, and we'll continue to monitor if anything else comes out of that live event at the White House. In the meantime, we've got just about 4.5 minutes to go until we wrap up this trading day, and you've got stocks pretty much at their highs of the session, Tim.
Yeah, you do. The S&P 500 right now higher by 0.3%, but you peel back the layers, Carol, and there's some really big movers in there. FMC Corp is down 33% on a percentage basis. It's the worst performing stock in the S&P 500 by far. It's an insecticide firm. It's one of my decliners. Okay, I don't want to give everything away.
Don't give it all away.
The company said sluggish sales from Brazil to India will lead to sharply lower than expected profit. I mean, losing a third of its value in a single day.
I think what's fascinating, even just coming up with some of my gainers and stuff, it's not necessarily, well, there's definitely a couple of household names, but not all of them. And it's just interesting to see how, based on earnings that are coming through, you are seeing certainly some stocks separate from the pack in terms of gaining or to the downside. We know we had some big tech names to the downside, including Alphabet today and also Uber.
Hey, speaking of big tech names, the earnings parade continues after the bell today. We do expect to hear from Qualcomm as well as ARM. MicroStrategy, or the company I should say formerly known as MicroStrategy, which calls itself a Bitcoin trust, it came out today and said that it's now called Strategy, so we'll be sure to get that right moving forward. Earnings results coming at just about 4:05, and a little later in the program, we're going to hear from Ford CEO Jim Farley.
Yeah, so it'll be interesting to see what they have to say about the concerns around tariffs, be it against Canada and Mexico. We talk so much about that global supply chain that is required and part so entrenched within the auto industry in terms of putting together a car. So what they have to say just about the fundamentals of their business, but the broader macro environment will be interesting to see the commentary around that. We also have Allstate, News Corp, Viking Therapeutics. Again, as you mentioned, a lot of earnings coming after the closing bell. All right, folks, that's going to do it, at least for this hour of Business Week. Do not go anywhere. We're going to wrap up the trade on this Wednesday. Over to our TV colleagues. That's because the closing bell starts right now.
Talk about as to what happened in this market, a lot to talk about, but what's going to happen after the bell. Our full market coverage with our global simulcast starts right now.
The closing bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele taking you through that closing bell. Global simulcast, it starts right now. Scarlett Fu in the TV studio, and Looking Lou, Carol Massar and Tim Stenovic deciding to join us for today as we bring together our audiences across all of our Bloomberg platforms. Carol Massar here on a somewhat mixed day here in the market, screen across the screen, but a lot of different stories driving it.
Yeah, it's kind of fascinating when you think about Alphabet and Uber and Snap and some of these big names that are really seeing some big declines in today's session, and yet the overall trade is higher. I mean, even some of our gainers or decliners are names that we don't typically talk about today.
Yeah, I mean, on one hand, you do have Alphabet and Amazon and Tesla driving the market lower, but you have NVIDIA, Broadcom, Eli Lilly pulling things higher.
You know, I wonder also how much data is a driver for today's trade, right? Tariffs are kind of on the back burner right now, for at least for the next month for Mexico and Canada. So we're back to staring at the data and thinking about what the Fed does. And ISM Services disappointed. Is bad news good news now again?
Right. And then you got that decline in the 10-year as well when it comes to yields, down by about 9 basis points. Even if it's a short squeeze, that clearly also having a little bit of ripple through.
Yeah, and of course, everyone's still focused on all of the things coming out of Washington, and will that have an impact? And the question we've been asking a lot of our guests today is, do you sort of set up a defensive playbook for that? And if so, what is it?
Yeah, there's so much coming out of investors, right? What do? Do they sit still? Do they make some moves? It's really a difficult environment
And we have to talk about as well this idea of this big drop that we're seeing in yields today. That could be a net positive for stocks, so I'm not sure exactly what people are buying and why they're buying into the Treasury market, and that's necessarily a bad sign for the economy. The closing bells in New York as we wait for that deluge of earnings across the wire. A Dow Jones Industrial Average higher by more than 300 points with 0.7%. The S&P 500 up 24 points or 0.4%, and the NASDAQ, guys, going to close out the day higher by 0.2%.
All right, guys, Qualcomm is out. Let's go right to their outlook. See second quarter revenue of 10.3 to 11.2 billion, and that is above the street estimate of 10.35 billion. So we'll look for subsequent reaction in the aftermarket. Second quarter, actually going back, second quarter adjusted EPS, also the outlook, 270 to 290 a share, and Scarlett, that compares with 269 a share.
And in terms of second quarter revenue, Qualcomm sees 10.3 billion to 11.2 billion. Analysts were looking for 10.35 billion. This is very much a company that's become a barometer for demand for smartphones, and it comes at a time when, of course, Apple is trying to reduce its reliance on this company. So we're going to really wait to hear how it's doing with expanding to newer markets like the auto market as well as PCs.
Yeah, on the bottom line, first quarter adjusted earnings per share coming in above estimates at $3.41. The company sees second quarter adjusted earnings per share coming in above estimates, $2.70 to $2.90. Second quarter revenue coming in above estimates, or actually at the higher part of the estimate. The estimate is for $10.35 billion. This company is seeing second quarter revenue from $10.3 billion to $11.2 billion. Shares right now in the after hours bouncing around, but higher by 0.7%.
Yeah, also taking a look at the broader market, Skyworks Solutions is out as well, looking for second quarter revenue coming in at $935 to $965 million. That is a solid beat. Taking a look at a succession plan as well, Philip Brace will succeed the current CEO and take that helm. That company also looking at adjusted earnings for the second quarter coming in about $1.20. That winds up beating. They did have excess inventory last quarter in automotive and industrial end markets, so interesting to see the read-through on that.
Yeah, and interesting, too, we should point out, both Skyworks and Qualcomm heavily dependent, of course, on Apple. Both companies getting a pretty sizable chunk of their revenue from that relationship, a relationship that we know has been tested. And just going back to Qualcomm for a second, we talk about this idea of where they fit into the broader chip debate as we wait for earnings out of AMD. And we talk about sort of that broader AI narrative and whether there is a place for Qualcomm in that.
No, that's a really good point, right? They've been trying to diversify out of and get away from some of their older business. And having said that, just taking a look at the stock in the aftermarket, Qualcomm is bouncing around. We had seen it a little bit higher. Now it's down about 0.7%. So we'll have to see about, what in terms of growth and where it's coming from is going to be important on the call.
All right. And worth mentioning as well, the comments from the CEO, Cristiano Amon, talking about delivering growth across diversification initiatives. Again, reducing its reliance on the smartphone business and executing their 2029, fiscal year 2029 targets to achieve $22 billion of non-handset revenues. Again, going back to that idea of chips in cars and chips in PCs. When it comes to chips in cars, NVIDIA is a competitor.
Well, that's what I'm curious about, too, because we've had him on the program, and he has talked about this automotive strategy. And we should point out we are going to get Ford earnings a little bit later this afternoon. And it raises a lot of questions here about the strength of that business as well. More chip earnings crossing the wire right now, I'm told. ARM.
Yep, ARM Holdings, their third quarter total revenue coming in at about $983 million. That is a pretty solid beat there. The company also taking a look at their fourth quarter revenue guide, coming in a touch higher than estimates, that high end about $1.28 billion. And the operating income, a nice beat for the third quarter, coming in at $442 million. And of course, it's that royalty revenue they want to pay attention to for the third quarter, coming in at $580 million. That is also a beat.
The company is saying in comments to shareholders that AI demand continues to drive strong momentum for the ARM ecosystem. AI growth from the edge to the cloud is creating demand for more energy-efficient compute. New AI hardware, the rise of AI agents, and the emergence of smaller, lighter LLMs are unlocking edge AI use cases in smartphones, PCs, consumer electronics, and more. Shares higher so far this year before today by 40%.
Yeah, it's interesting, too. If you have a Bloomberg terminal, you got to check out the SPLC function. You can kind of get a better read here on which companies that ARM is dependent on. Obviously, Microsoft, Qualcomm, two of its biggest partners, if you will, here. And, of course, that could have a big factor here on how these stocks perform in tandem tomorrow.
All right, MicroStrategy looks like they're just starting to cross in
that
terms
would be
of
strategy.
All right. But right now it's coming across.
Yeah,
All right. All right, strategy. Fourth quarter digital assets, $23.91 billion. The estimate was a little bit below that, $22.54. Fourth quarter revenue, $120.7 million. That's a little light. It was the street estimate was $124.4 million. And fourth quarter number of Bitcoins held, that's what it's all about, 447,470. The estimate was 425,149. So a bit above that.
Why did they change their name to strategy? That doesn't tell you anything about what
Also, how do the analysts not get it right?
Hey guys, Ford earnings crossing the wire right now. Fourth quarter adjusted EPS looks like a pretty sizable beat, 39 cents a share. The street was looking for 32 cents a share. The company also saying that revenue in the most recent quarter also coming in slightly above estimate at $27.3 billion to $25.85 for the full year 2025. Adjusted EBIT, here's your range, $7 billion to $8.5 billion. The street on average was looking for 8.57. So the top end of that range is below the average of street estimates here. And also just again, looking forward here at those 2025 numbers, free cash flow coming in at about $3.5 to $4.5 billion. That's their estimate for the full year here. It'll be interesting to see if we can get some additional numbers here on what they view in terms of actual production and deliveries going forward, and what the mix of that is going to be.
Yeah, well, talking about where the demand is, Ford Blue, which is their internal combustion engine cars, that was up by about 4%. Their Ford Model E revenue, that's going to be their green stuff. It's going to be their EVs, is down about 13%, and it's their commercial trucks that you're looking at for Ford Pro that's up by about 5%.
We should also mention that Ford is going to pay a supplemental dividend of 15 cents a share. They've been doing that at the start of each fiscal year for the last couple of years. So that's something that investors will want to, of course, get as they wait through this restructuring that's taking place, especially for the EV business.
Did you guys see that story the other day on the terminal about Ford's EV strategy, or maybe some of the concerns about what that strategy is going forward?
Yeah, about the F-150 Lightning, the challenges with range there.
Yeah, but remember, I mean, they had this big splashy rollout, you know, the F-150 Lightning, the Mach-E, and a couple other vehicles. And you're looking at revenue in that most recent quarter from that basically EV division, if you will, down 13% here. And that whole article was kind of calling into question why people have not embraced the Ford models, the Ford EV models, I should say, as much as they've had competing models, particularly some of the Teslas.
Yeah, one concern that was raised in that story was that the Cybertruck, which was widely seen as a niche product, recently outsold the F-150 Lightning, which I think to a lot of people is pretty surprising. The company certainly changing its strategy when it comes to EVs. It's pretty wild to see the transformation, because just a couple of years ago, the wait to get one of these was so long, they couldn't make enough of them.
All right, guys, you've got Ford down about 6% here in the aftermarket. Qualcomm now up about 2%, and ARM down about 4.8%. So we're seeing some big movement here in the aftermarkets. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. I'm taking a look at shares of Ford down 6% as we speak. The company reported fourth quarter adjusted earnings per share at 39 cents. The estimate was for 32 cents. The company, though, seeing 2025 adjusted EBIT $7 billion to $8.5 billion. The estimate, Carol, was for $8.57 billion.
Just want to point out, our Keith Naughton out with the story on the Bloomberg saying Ford warning that profit may fall by $2 billion or more this year due to an expected drop in vehicle prices and costly new model launches. Company's earnings before interest and taxes will fall to a range of $7 billion to $8.5 billion, down from that $10.2 billion profit it generated back in 2024, just last year. Keep in mind, Ford lost a record $5.1 billion on EVs last year and predicts the deficit could widen to as much as $5.5 billion this year. So that's a bit of your backdrop and explains why we are seeing Ford shares dip in a big way here in the aftermarket. Tim, the stock right now, it is down about 5%.
There's also those concerns about tariffs and the question about what the tariffs will do for companies, including the big three, Ford, Stellantis, and GM. GM, at least by one measure, the most exposed to tariffs on Canada and Mexico. We know, though, that those tariffs have been put off for at least till the end of this month.
All right, so let's see, get a little bit more on Ford in particular. With us right now is Rebecca Lindland. She's Managing Director Automotive at the consultancy Allison Worldwide. Rebecca, you have been following the auto industry for a long, long time, and I know maybe you're not going to rip apart the balance sheet here, but let's talk about where Ford is, and based on what you just heard about their latest financial update.
Yes, Carol, thank you so much for having me on. As you know, I'm not a stock analyst, so what I really look at and focus in on is consumer behavior and consumer acceptance when it comes to electric vehicles in particular. And one of our sister agencies here at both Allison Worldwide and Stagwell overall is Harris Polls. So I pulled in some information, and what was really interesting to me is that only 26% of people that we polled actually said that the federal tax credit would be a top 5 reason for why they would consider an EV. So we're finding that what consumers really gravitate towards is the fact that we still need charging infrastructure in order to make them feel more comfortable buying an EV, and this really impacts all of those plans that you both were just discussing.
What is that
it's a really big challenge.
What does that infrastructure look like? Like what you know, it doesn't look like gas stations, because we know that, because
Right.
a lot of the charging can occur at home. We know that. So it's not like, you know, a gas station or an EV charger on every corner like there is with gas stations. What does the infrastructure look like to make people comfortable?
Yes, it's a great question, Tim. So what's interesting when you think about it, actually, if you look at level 3 chargers, which are the most expensive, that's what makes up the Tesla supercharger network and such, those actually, most modern vehicles, most new EVs coming out today, they can charge in about 20 to 25 minutes if you have a level 3 charger. So I actually did a little experiment when I drove from Los Angeles to Las Vegas for CES. I thought, let me try and see how long would I be inside to use the restroom, get a cup of coffee, and get back to my car. And it actually took me about 15 to 18 minutes to do all those things. And so when you're charging, when you're at a rest stop, if we have the proper infrastructure, we could actually put chargers in some of those gas stations and some of those locations. The ideal really is that you're charging at home, at least for right now.
Well, you know what, I want to just go back to, you know, here we are watching Ford sell off big time in the aftermarket. And I don't think we were surprised necessarily completely, but I do wonder, you know, what's the way forward? China is moving way ahead on EVs, and, you know, I do wonder if the American companies, Rebecca, take a back seat because the American market and American demand isn't there, because maybe the infrastructure isn't there, and there are still some concerns. The costs of EVs have been so expensive in the United States. I mean, certainly government policies and subsidies have helped that out. But, you know, what does it mean for Ford and GM and Stellantis in terms of their role in the global auto market if they are pulling back on EVs because they kind of have to?
Well, keep in mind that all the technology is there, though, Carol. So they have developed these vehicles that they could sell in other parts of the world. So they could continue to make internal combustion engines and hybrids. Let's not forget hybrids. Hybrids have been around for as long as I have and longer. And yet consumers are just now seeing them and saying, you know what, that's actually a really good solution. And by some reports, we've actually seen hybrid sales are a bit of a rejection of going full EV, right? Because you can charge at home and you can charge. But at the end of the day, really, this is about convenience. Consumers will adopt technology that is more convenient. And right now, without supporting infrastructure, an electric vehicle simply is not as convenient as an internal combustion engine.
I mean, if you were sitting down with the Ford CEO, and actually we're going to hear from the Ford CEO, Mr. Farley, in just a moment across our Bloomberg platforms. Jim Farley is going to join us. I mean, what would be the number one question that you would want to talk to him, or number one or number two, in terms of his business and Ford's role in the global auto market?
I would advise both Jim and Mary Barra and anyone else who would be willing to listen that this is about consumer choice, that we as a nation in the U.S. right now, we really don't have the infrastructure to support a full migration to electric vehicles. It is about providing consumers with a choice, with the most fuel-efficient version of what they want to buy. And that's one of the things that we need to focus on. We are really not in a position to have a full-on, full EV, and we don't need to have full gas anymore, because we do have fantastic electric vehicles that are out there with the type of range, 300 to 400 miles, just like your internal combustion engine, but it really gets back to charging. That's the number one challenge that we have.
So what about EREVs? We've been talking about these with Keith Naughton. These are sort of plug-in hybrid electric, but with super long range. I mean, we're talking hundreds of miles here. What's the future of those?
Yeah, the extended range, right, electric vehicles.
Sure. I mean, they're obviously, it gets back to charging. So it doesn't really matter. Like, even if you have a hybrid that is both battery and electric, you still have to, in order to maximize the ownership benefits, you still need to charge it. So it's really, it's a simple but incredibly complicated answer. So it is about making an electric vehicle, whether it's extended range, whether it's short range, it is about making them more convenient and providing an opportunity to charge. I call it, a lot of consumers are looking at this as the perception of the exception. When people consider an EV, they say, yes, but once a year I drive to grandma's house and I don't know where I would charge on the way, right? And so instead of sitting there and thinking, you know, every day or maybe 2 days a week or 3 days a week, I go into the office, I drive 35 miles a day, I can actually charge almost once a week. That's the type of conversations that we need to have instead of looking and saying, yes, but you know, I go to grandma's house once a year for Thanksgiving or something.
All right, we got to run. Hey, Rebecca, thanks so much. Rebecca Lindland, Managing Director, Automotive at Allison Worldwide, talking with us about the auto sector. And we do so because we are watching shares of Ford here in the aftermarket. Folks, they are down just shy of 5% here. And this as the company sees a sharp profit drop. And they're talking to and addressing, you know, the possibility of tariffs and the impact, not the possibility, but the reality, perhaps, and the impact it could have on their business, certainly on the cost side of things.
Yeah, that's right. Ford warning that profit may fall by $2 billion or more this year on an expected drop in vehicle prices and costly new model launches, adding to risks posed by potential steep new tariffs under President Donald Trump and dimming electric vehicle prospects.
Yeah, the second largest U.S. automaker just saying that earnings before interest and taxes will fall to a range of $7 billion and $8.5 billion. That's down from the $10.2 billion profit that it generated last year. So once again, you've got the CFO telling reporters that earnings will drop this year due to industry-wide prices falling by about 2%. And that cost of launching the new Lincoln Navigator and Ford Expedition SUV, which will result in a break-even first quarter. So Ford shares are down. We're going to hear from the CEO in just a moment. This is Bloomberg.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Earnings fast and furious. We got you covered after hours. And this Bloomberg Business Flash brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Ford shares after hours now trading down by 5%. Ford is warning that profit may fall by $2 billion or more this year on an expected drop in vehicle prices and costly new model launches, adding to risks posed by potential steep new tariffs under President Trump. Again, after hours, Ford down by 5%. Qualcomm out with a sales forecast for the current quarter that topped estimates, indicating demand for high-end handsets remains strong, and the company is making progress in new markets. Qualcomm is the world's biggest seller of smartphone processors after hours. We do have, actually, right now we got Qualcomm trading down, bouncing around, down by 0.5%. And MicroStrategy, the software maker that has been tapping capital markets to fund purchases of Bitcoin, has announced a name change. It wants to be known now as simply Strategy. And after hours, we learned that MicroStrategy's fourth quarter number of Bitcoins held did beat estimates. The Dow, the S&P, and NASDAQ today all advanced. S&P 500 index up 23, up 0.4. The Dow up 0.7%, NASDAQ up 0.2. 10-year 4.42%, the 2-year 4.18%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Well, now is a good time as ever to be talking about leadership. We're going to be hearing from Ford CEO Jim Farley in just a few minutes. He's got his work cut out for him.
Yeah, trying to deal with, what's been going on, all of the automakers, global automakers, in terms of the EV market, but in particular here in the United States. But there's also, tariffs and so on and so forth makes that job trickier.
They're also just about 2.5 weeks into a leadership transition in Washington. We see some shakeup in C-suites. Match Group named Zillow co-founder Spencer Raskoff as its new CEO, replacing Bernard Kim. But as we all know, not all leaders or CEOs are presidents, Carol, and that's where Paula Davis comes in. She's founder and CEO of the Stress and Resilience Institute. She's got a new book out. It's called Lead Well, 5 Mindsets to Engage, Retain, and Inspire Your Team. She joins us this afternoon. Paula, good to have you with us. You wrote a book a few years ago about stress and burnout, and we spoke to you back then. What is the relationship between stress, burnout, and leadership?
Thank you both so much. I'm so glad to be back on. So a lot of a lot of the material for this new book really came from my work in the last probably 4 to 5 years or so since my first book has come out, really looking at burnout in a different way. So taking a look at the systemic or root causes of it. And when I started to dig into that with leaders and teams, I realized that a lot of the result was stuff that needed to be focused on or was really under more of the purview of leaders. And so I realized what those themes were and just kind of turned them into the mindsets for the book.
I do wonder with, what has been coming out of the government in terms of diversity, equity, and inclusion efforts, a rollback there, and we increasingly see companies saying that they're ending their efforts or, not going to be maybe as visible when it comes to them. In general, in terms of like inspiring your team and thinking about your team, is there a whole rollback that's going on in corporate America, or do you see differently?
So I think that certainly DEI is going through, if not certainly a rebrand, I would say at the very least. And I think that, one of the easiest ways for leaders to, I think, help with how do I deal with the fallout from that with just in terms of how my folks are feeling, is with one of the mindsets that I talk about, which is kind of upping your game in the sticky recognition and mattering component. And so that's a mindset that I oftentimes will encourage leaders to start with, which really just entails really making sure you're being very clear, letting people know the evidence of their impact and the impact that they're making and the impact that their work is having on your clients or your business units or whatever, the outcome is, because it activates something really powerful called mattering. So really that combination of knowing we're achieving something, but also that we're feeling recognized for that. That's a big deal.
I think when people think of leadership, they always think of managers or people in positions of power. But this book also covers like ways you can engage yourself, even if you're not a manager, ways you can apply yourself, ways you can take a self-assessment to sort of understand where you're going. Talk a little bit about who this is for.
Yes. So, the core audience really is for leaders or managers at any level. And I don't think you have to be in the C-suite. I know you don't have to be in the C-suite to take advantage of what this is about. So if you are new to your role, if you are new to a leadership position, if you haven't been leading all that long, really at the end of the day, leadership is just a set of behaviors that you use to get your team and other people in your purview where you want to go all together. And so there's definitely that focus. But yeah, I did definitely want to sprinkle in, some bits and pieces for people as well who, just kind of want to flex their muscles in a way that's going to help them feel a little bit more inspired and engaged.
Does AI make this all harder, Paula, especially when I think workers are saying, well, wait a minute, I'm kind of concerned that advanced artificial intelligence is going to take my job or take parts of my job?
I think it makes it more stressful, but I also think that this notion, part of the message that I want to get across in the book is that now is the time for kind of these concepts of human sustainability and human-centered practices and human-centered leadership. So the more tech-focused and techy we're going to get and continue to get into the future, the more it's going to really demand or mandate that we also really up our game on some of these human practices as well, because they're going to have to coexist. AI is certainly going to, continue to influence the landscape of our work, but humans are always going to, I hope, be part of the work equation. And so, clients and people still want to deal with other people, and so we got to figure out how to make that happen.
How does that work though in an AI world? Do we have AI ever replacing managers in your view?
That's really interesting. So I think there will be things that AI is going to be always really tough to replicate. Like, I think it's going to be hard for AI to replicate curiosity, good communication skills, good teamwork. It can enhance maybe perhaps some of those efforts. And when you think about some of the psychology too, when we talk about resilience and when we talk about values and meaning, those are going to be things, and certainly already, you look at Gen Z and some younger millennials and really honestly, all of us really want that sense of values alignment and meaning in our work. And I think that AI and technology is going to have a hard time replicating some of those human attributes.
Yeah, it's kind of interesting, right, and how this dynamic, plays into it. Just got about 30 seconds here. Do you feel like most leaders get it right, or there's a lot to be learned?
I think most leaders are trying. I think they're trying really hard. I think they don't have a language. I think they don't know where to start. And this is such a complex and challenging time to lead that they really need concrete skills and a roadmap. And that's really the void that I'm seeking to fill.
If leaders could change one thing and just that would kind of listen to you, what thing could they change that would make them maybe better leaderships along the lines of what you've been talking about?
Yeah, I think that going back to the notion of, making sure that people see very clearly that they're making an impact and how they're making an impact, simply just noticing other people, telling people how you rely on them, and kind of focusing on those basic first step human skills is critical.
Paula Davis, the book is Lead Well. Thank you so much. All right, we want to go back to Ford. Tim, we've got Ford shares dropping about 5%.
Yeah, the company said profit may fall by $2 billion or more this year due to expected drop in vehicle prices and costly new model launches. We are seeing shares right now down by about 4.8%. Let's go now to our TV colleagues who are standing by with Ford CEO Jim Farley.
I want to ask about the expected drop in vehicle prices. Is that something that is across the board that we're seeing in the industry, or is that specific to what you're seeing at Ford?
No, I think it's across the industry, and we're seeing it all around the world. After COVID, all vehicle prices really went up, but with the acceleration of EVs, as well as inventories normalizing for customers and dealers, we're seeing the prices come down across the globe. And affordability is a big concern for customers.
Yeah, it certainly is. And you, of course, have some new model launches that will be coming up in the years to come. But in the meantime, it's a matter of managing through this interim period. And during this interim period, there are a lot of question marks over tariffs. The tariffs that President Trump had planned to impose on Mexico and Canada have been pushed out by a month. How does the company plan to take advantage of this 4-week delay that was announced earlier this week? Will you be stockpiling inventory, for instance, to get ahead of that?
Well, I think Ford is among the best industrial companies at scrambling. We have the largest U.S. footprint of any car company. You can imagine we're increasing our component supplies, both at the company and our suppliers, and we're adjusting both our Mexico as well as our U.S. plants to make sure nothing crosses the border. I think longer term is the bigger concern. These kind of tariffs, especially in these two countries, are very significant, and if they persist beyond months, we could see billions and billions of dollars of pressure on the industry, lost jobs, lots of impacts to communities and our ecosystem in the industry. And that's what we're talking to the administration about and congressional leaders.
So what kind of communications have you had specifically with the White House officials about either tamping down some of these potential tariffs or assuming that Trump does go through with them, how, if at all, the auto industry either could be compensated or in some way have that impact mitigated?
Well, actually, we spoke as an industry, Mary, myself, John Elkin from Stellantis, we all kind of said the same thing, which is 4 years ago, we committed to the USMCA tariff requirements, and all companies have done their job to make sure our vehicle and components are USMCA compliant, and we asked for those to be exempt because it's a trade agreement that we all agreed to actually with the Trump administration. We think that that's only fair. Look, right now, this tariff as proposed is a windfall for South Korean and Japanese companies who can import millions and millions of vehicles without these tariffs. Meanwhile, we have USMCA compliant vehicles and components that are susceptible to this, which will have all this devastating impact. So what we're asking for is a reasoned policy around tariff that's not just these two countries, and we understand the pressures on the border and illegal drugs, but it's more comprehensive. We also have to work through CO2 policy as well as tax policy with the IRA.
So what is your strategy then to navigate this? I mean, this isn't going away, whether it's 25 or something less. This specter is certainly a big part of the president's playbook to address the issues that he wants to resolve here. You can't just up and move a factory overnight, Jim. So what exactly are you strategizing now with your team to make sure that not only are you producing the cars you need to produce, but you're producing them at a cost that's reasonable to you and, more importantly, reasonable to the customer?
Well, first of all, Ford is in a very fortunate situation. We decided many years ago to have an outsized footprint in the U.S. So our manufacturing footprint, the number of vehicles that we make, 80% of our vehicles sold in the U.S. are made here. All of our transmissions, most of our engines. So we have a really big advantage compared to our competitors. But there are optionality that we can make. And look, we've localized a lot of battery plants and EV production in Tennessee and Kentucky because the production tax credit is there. So we're really asking the administration, please preserve the production tax credit. Let's have a reasoned tariff approach. And most of all, let's have reasonable CO2 targets that are in line with what customers are actually buying.
Do you have spare capacity inside the U.S. right now of significance?
No. No, we are maxed out in the U.S. As I said, we're the largest U.S. producer. We export more cars. A lot of people don't realize that Ford exports a lot of cars outside the U.S. We don't have a lot of excess capacity. A little bit, and we're taking advantage of that, and that's why we're building new capacity in Ohio and Tennessee and Kentucky for batteries and these new EVs that will be coming out in the next couple of years. That's why we're investing in the U.S.
Tariffs are clearly on everyone's mind, and that's something your CFO has made, in her statement as well. And the guidance that you offer does not include the potential impact of policy changes by the White House. Once we do get the actual tariffs announced and imposed, how quickly can Ford come out with some specifics, quantify the impact, and provide a new forecast? Is that something that you intend to do?
Of course. I mean, we're always transparent. I will be able to say, though, in our guidance, we can handle a couple weeks of tariffs. If it goes beyond that, obviously it will be billions and billions of incremental profit headwinds for the company. So, I think the most important thing is having a productive discussion with the D.C. leaders, the Trump administration, congressional leaders, about what this could do to our industry, what it means for U.S. jobs. And, they ran on a campaign of making the auto industry stronger. And that's what we expect out of them as policymakers. We have a lot of policy decisions to make in the coming year. As I said, CO2, tax policy, and we believe that this administration, congressional leaders are going to back the U.S. industry, companies like Ford that have doubled down on the U.S.
Right. Okay. I want to talk a little bit about your EV business as well. The EV strategy clearly in overhaul mode. Your more affordable models that go further on a single charge won't really be available for 2 years. And Ford is kind of unusual in that you do break out your EV profits in your financial reports. When will you have visibility on those affordable models that go further on a single charge in terms of being able to really turn around that business?
Well, look, we made the decision. We've been number 3 to Tesla in the U.S. EV sales for 3 years now. We've been number 2 for 3 years, and we're also number 3 on hybrid. So we know a lot about these customers. We decided a couple years ago, based on what we heard from customers, that we really needed to redo our EV lineup. So we made that decision a couple years ago. We canceled a couple models. Those vehicles are in development now. We would rather grow profitably than grow. And that's what we're deciding on. So this next couple of years, we're number 2 to Tesla, a long way below them, but we scaled to 100,000 unit plus for a couple of years now. We want to wait until those new vehicles come out in a couple of years, as you said, that will really transform our Model E profits. They're designed differently. They're going to be manufactured different. They have a different supply chain. We've really learned a lot from Tesla, from the Chinese, from a lot of people on how differently we need to design these EVs to be profitable.
So Ford is committed to a long-term EV strategy then?
Absolutely.
What about?
Absolutely.
Go ahead.
I was just going to say, we see the people who buy EVs, they don't go back to combustion. They have very high level of satisfaction with the vehicle. It's a small part of the industry in the U.S., only 8%, but it's growing. But the only way it's going to grow in a sustained way if it's a profitable business for us. And that's why we had to completely redesign our vehicle and our approach.
Jim, we want to really thank you for taking time for us here on what I'm sure is a very busy afternoon for you. Jim Farley there. He's the CEO over at Ford. Those earnings just out. And we should reiterate here, the numbers in the most recent quarter did beat, but some concerns here about the guidance going forward.
All right, everybody. You are listening, of course, to our TV colleague, Romaine Bostic, who he and Scarlett Fu just wrapping up a conversation with Ford President and CEO Jim Farley. Some headlines out of that interview. The Ford CEO saying that 25% tariffs would lead to job losses and says the tariffs would cost the auto industry billions. Also asking the administration for, quote, reasoned tariff approach. So certainly addressing some of those concerns that have been weighing on the auto sector.
He also noted that he said that this administration ran on strengthening the auto industry here in the United States, and he would love to see that happen. Hey, a reminder, Ford reporting earnings warning that profit may fall by $2 billion or more this year on an expected drop in vehicle prices and costly new model launches. Ford did lose a record $5.1 billion on EVs last year. It predicts, Carol, it could widen to as much as $5.5 billion this year.
Stock down 5% here in the aftermarket. All right, lots of earnings after the close today. For more, let's hand things over to Charlie Pellet now with the Bloomberg Business News Flash.
Thank you very much. And here's what's going on, Carol and Tim. We are brought to you by Oracle. Attention, growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. As you've been hearing on Bloomberg, Ford is warning the profit may fall by $2 billion or more this year on an expected drop in vehicle prices. Down almost 5% after hours. Qualcomm, the world's biggest seller of smartphone processors, gave a sales forecast for the current quarter that topped estimates, indicating demand for high-end handsets remains strong. After hours, we got Qualcomm up now, actually trading lower. Qualcomm down now by about 3.5%. Turned out to be an update today for the Dow, the S&P, and NASDAQ. As for the overall market backdrop, Jeanette Garrity is chief economist at Robertson Stephens, and she was a guest today right here on Bloomberg Business Week.
The markets appear to be, and I think most investors are sort of saying, okay, let me focus on the fundamentals as they are. and look forward, and the economic fundamentals are very good. It's an economy firing on all cylinders right now, and I think that's carrying through on how people are thinking about the immediate opportunities.
Jeanette Garrity, chief economist at Robertson Stevens, interviewed right here on Bloomberg Business Week. S&P up 23, up 0.4%. The Dow up 317, up 0.7%. Nasdaq up 38. That is a gain of 0.2%. 10-year 4.42%. The 2-year 4.18%. Briefly, MicroStrategy changing its name to just Strategy, and Starbucks going to be placing limits on its mobile orders, all part of a broader plan to speed up service. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Well, Christina Stembel often joins us during big months for the flower industry. Think Mother's Day and, yes, Valentine's Day, which is coming in just over a week. Carol Masser.
Warning everybody.
We don't need the excuse of a holiday, though, to talk to her, because we love it when she joins us, especially when she's here in New York from the West Coast. Christina is founder and CEO of Farm Girl Flowers. It's a company that she bootstrapped into a $35 million business. She joins us here in the Bloomberg Interactive Brokers studio. How are you?
I'm good. Thank you for having me back. I love being here.
It's great to have you.
How's business?
Business is good. I mean, we're in our second busiest time of year. Thank you for the reminder. We're about a little over a week out, so please, everyone, get your orders in. But we're holding steady. It's exactly where we thought we'd be.
How much comes in last minute? I am such a last minute girl. So tell me how much comes in last. And how do you manage a business for that?
Yeah, it's hard. I mean, we put orders in months and sometimes up to a year in advance for some products, some of our materials. So we just, it's a wing and a prayer a little bit. It's good projections too. So, it's hard. But within the week before, probably about 70% of the orders will come in.
Wow. So a lot are coming in right now.
Yes.
We got to go to tariffs and talk a little bit about where the flowers come from and how you're looking at the environment, given what we heard from the president a little earlier this week. Yes, Mexico and Canada, those are on pause right now. Where do the flowers come from, and how do you think about tariffs?
Yeah, so most of the flowers that everyone purchases in the United States come from South America. So Colombia was the first one that put everybody on edge in the floral industry. It would have been too late to really impact Valentine's Day numbers, but by Mother's Day, our prices would increase dramatically with Colombia. So that's on pause right now as well, which is really wonderful. Canada and Mexico, differently. So Mexico is going to impact us all as well. About 80% of all the flowers that are sold in the United States come from other countries. Ours is less. We're about 55 to 60% domestic right now. But that's going to increase. Our domestic production is going to be increased because everyone's going to be fighting for it because they're not going to be able to get the same prices elsewhere.
You think, how much, in anticipation of this impacting, how much does it, when do people start to change in terms of growing more here in the United States? How much more can you grow in the United States? Because you're competing for land against everything else. So I'm just curious, how quickly can the model change from importing to having it grown domestically?
I don't even know if it's possible to change it. I mean, following, the CEO of Ford, I feel very similarly to him. We don't have the infrastructure here. There's not a lot of succession planning in farming in general, in agriculture of any kind. Flowers are the same way. So, the land has been sold. The grandfathers that started farms, their grandchildren have already sold a lot of the farmland. Almost everything that was, I shouldn't say everything, but a large percentage of what was grown in California, which is the largest growing state in the United States, is now in Baja, Mexico. So they call it Baja California. We know that's not true. So the tariffs are going to, definitely impact that. And there's not the land, also the labor. I mean, there's not, for agriculture jobs, there's not the labor availability. The infrastructure costs too much. The insurance, people aren't going to spend $300 on a bouquet. And, in order to turn around the ship, it's going to require American consumers to be willing to spend a lot more on sending a gift. And that isn't probably going to happen. So it's scary to think about all those things.
So if we were to see tariffs go into effect on Mexico, and, obviously the president has used this as a way to negotiate, at least he did that with Colombia a few weeks ago, where would the prices increase? You said it would increase for you. you would have to pass those along to the consumer.
Absolutely.
You would not be able to absorb those.
The floral industry is notoriously low margin. You know, I'm very proud of the single-digit profit margins that we have at Farm Girl Flowers. They are hard fought for that. We work a lot of hours. We work really hard for that, single digits. You know, the largest companies in our industry that are, you know, public companies, so you can go look at their earnings, have single-digit profits when they have profits. So there's no way for us not to pass it on to consumers. We're already subsidizing shipping by a large percentage. You know, now if we have to subsidize our gross margins are tiny compared to almost every other industry. I joke a lot. I have with you guys before. I wish we sold sweaters, right? We don't. So, you know,
or perfume.
Perfume. Something with like a very large, you know, mascara.
Have you considered developing NVIDIA chips?
Exactly. Well, so I mean, it's all going to have to be passed on. You know, we are. You know, because we have that little bit of profit that we've focused on in the last 2 years, we're able to supplement it a small amount, you know, like the CEO Ford said, like he has a couple weeks, like we can supplement it a bit, but not, you know.
It's also not like you guys can buy ahead and stockpile it in warehouses, right? There, you know, flowers just last just a certain amount of time.
5 days. We have 5 days.
You have five so,
days, yes.
Like, it's wild. You know, I do wonder about this whole idea of globalization that has happened over the last couple of decades, right, in global supply chains. And then we feel like we've talked a lot about nearshoring and onshoring. It sounds like for the flower industry, it's not even like financially, it won't work, even if we do it. Or it might not even be doable because there might not be the land or farming to do it.
Absolutely. I mean, when we first started talking, we had a large, you know, it was pre-COVID, we had a large manufacturing facility in San Francisco. So 40,000 square feet, we had 300 team members there, and we were losing our shirts. I'll just say that we were just breaking even enough to pay paychecks with that. We can't even do it not growing the flowers, just designing them into bouquets at that scale. There's not enough workers, and with, you know, I mean, Costco just raising the minimum wage to $32, which is wonderful. We wouldn't have that ability to. So we're trying to all compete with a workforce, an hourly workforce that we can't. So there's just so many reasons why this is going to have a ripple effect much greater than what most consumers would think.
So what do you do for assembly now?
We have a very diversified model. So we use farm partners that we teach them how to design them and ship them out. We have bouquet production facilities. Yeah. We have very little owned ourselves. It's been smarter for us to do it that way.
So you've essentially outsourced the design or assemblage of the bouquets?
Yes, we do it different than our competitors in a way that we control the design aspect of it, and so that way we can keep our quality where we need it to be. But it's not how it used to be pre-COVID.
So when you say you've outsourced it to farmers, so if it comes from South America on a plane, it's already in a bouquet?
Yes. Now, most of ours are with U.S. farmers, but we do have some in Colombia. We have one in Ecuador. So we do have facilities elsewhere. Some of them are designed there. Some of them are shipped raw materials to other facilities in the U.S. We diversified to get closer to the end consumer to help with our shipping costs that were killing us before when we first started talking as well. Yeah. In order to be able to compete with lower price points that we need to have to compete with our competitive set.
Is it getting easier or harder to do this? How long have you been doing this now?
14. This is our 15th year.
I thought it was
15. Yeah.
So, you know, and it's you who has been doing it. So I'm just curious, as a small business owner who has seen pandemics and you name it, like some really incredible things kind of test your ability to keep it going. Like, is it an easier business environment? And I'm curious to what you're anticipating from the new administration in terms of small business policy, if at all.
Yeah, I'm worried. I'm worried about this administration and what it's going to mean for us as a company.
Why?
Because
of tariffs and things.
And the uncertainty. Like, I've gotten used to, the easier part has been I've gotten used to more uncertainty. I understand now that should be a line item in my budget every year, which there is now for unplanned expenses, things I didn't understand before. And I think my mindset shifting from, you know, growth at all costs to profitability has helped us tremendously. But I had to sacrifice something for that. You know, I wanted the Silicon Valley dream. I wanted to build a company. I wanted to be the, you know, cover of Entrepreneur magazine. I wanted all those things, and that now I have a very different reality, and I'm happy with that reality. I'm happy that I can provide good jobs that are more stable. But the level of uncertainty with things I can't control right now, you know, definitely keeps me up at night.
So is it easier in general?
I think because it's easier because the education that I've received from doing it. Yeah. If it's harder, it's definitely more complex. But because I'm wiser now, it's a bit easier, I guess.
Yeah.
You bootstrap the company, so you don't have the same pressure that a lot of startups, and I'm not even considering you a startup because you've been around for 15 years at this point, that small businesses have after they raise outside funding, and that's for an exit. Last time we spoke with you, you said you were in this for the long haul. I'm sure there are companies that come by who want to acquire you. How are you thinking about that?
Yeah, absolutely. So I actually used to think this was my biggest curse. I actually owned the unfundable ChristinaStumble.com, by the way, and the unfundable. I used to think I would complain about it, to you both. I would complain constantly, and I'd be like, nobody will give me any money. Like, do I not look trustworthy? Look at our numbers. And now I think it's the greatest gift, because I see all of my friends that have, startups or not startups anymore, but have, board meetings every 3 months that they are just in so much pain about, and everybody is expecting them to work miracles in an economy that's not, it's not possible, Right. And, right now, I'm just, really happy that it happened. I think it's a big gift I was given. And how I'm looking at it for the long run now is, doing some smart strategic things that I think will help us in 5 to 10 years, not thinking about the next quarter, not thinking even this year. Like, it's a building year for us. We'll comp last year and have the same, single digits profit, hopefully. But that single digit profit is allowing us to do things like lock down some supply chain. We're vertically integrating. We're growing some flowers for the first time. We're doing things like that that I think will help us 5 to 10 years from now.
Where do you think you will be in 5 to 10 years?
Hopefully still here talking to you both.
We hope so too.
That's my dream. And, hopefully, we'll do sustainable growth. So we'll be bigger 5 to 10, 10 years from now, but we'll have done it the right way, in a way that we could be here 50 years if we wanted to.
Yeah. When you say sustainable growth, you're talking about financial sustainable growth.
Yeah,
but I also am curious about the impact on the environment and how your approach and stuff like that can be challenging.
Absolutely can be challenging. It's always weighing what's the best thing we can do, in our opinion, right? Like, we're very careful not to call ourselves like an eco, we get this title a lot, and we're always like, no, don't, there's nothing sustainable about flowers, really. There's lots of transportation, back and forth, inbound, outbound. They bring joy to people's lives, and we love that, but we do the best we can. We always make the right decision, even if it impacts the bottom line in a negative way for us. Yeah. We spend more money to do it the right way, but we don't ever tout our environmental consciousness.
How has what people want changed? Like, how has what you offer changed due to changing consumer taste? I was talking to somebody who's way younger than I am, and she just got engaged. She has a huge diamond, and it's a lab-grown diamond. And she was saying, all my friends who are getting engaged right now are getting these lab-grown diamonds, and we're seeing that kill the diamond industry and kill some of these retailers out there. Is that happening with flowers? Like, are there changing consumer tastes for younger people?
I don't think it's taste, really. It is price points, though. Yeah. What consumers will spend. I mean, Valentine's Day is the only exception to this rule. People are looking for deals right now. People are looking for a good value. So that does, I'm still head of product. I make every bouquet you see on our site. Wow. And when we're doing it, we are, always weighing, we need to keep our AOV, our average order value, up, as high as possible, but we need to not, right now we have kind of a gap in the good customer. We have better and best, but we're working on creating a better, offering for the good customer that is more price sensitive, especially going into next year. I think it's going to be even more and more necessary. And also, people are looking to feel like they got a deal. So discount codes, we used to be we're like, we give you the best deal we can. And now we're like, okay, here's a discount code. Here's a free ship shop. So it looks like you're getting free shipping, but shipping costs a lot of money. So it's not free shipping.
I heard there's no such thing as free shipping.
Nothing. Exactly. There is no such thing as free shipping. So
I feel like Shark Tank, what's your customer acquisition cost? Is it expensive, or do you find most of your customer base, they're repeat buyers and so on and so forth? Give us an idea.
Yeah, so about half are repeat and half are not. We do not exceed $25 in customer acquisition cost. Okay. Because we can't. Right. So that's why we're smaller than we want to be right now, but we're doing that because if we go over that, we know that we are paying more money than we can afford to be financially healthy. So we just cut it off there.
Are you using AI at all?
A little bit. So not in the best, we use it a little bit.
We're picking everybody's brains because we're not using it as probably, and everybody's like, you should be. And we're like, all right, so how are you doing it?
I use it a lot personally for writing. Do you? Yeah, absolutely. I have it. It knows my tone now. Every job description, I have it writing for me now, and the tone that everything is. So I use it a lot personally for that. In emails as well. I'm always like, take out the emotion in this email or things like that. So I use it a lot for that personally. And it helps from business, because I can get my soapbox out and stuff. I need to not sometimes. So I use it for that. We use it a little bit in customer service. There's even with the platform we use, there's a make it nicer button that, that uses AI to make our, after customer service, if they're getting hit with a snowstorm,
So you have a button, you get it, when you're sending an email to a customer, you have a button you press that says make it nicer?
Make it nicer.
Wow.
Thank you, Gladly.
Is it in an LLM?
It's Gladly, which is a software program for customer service, which we love. And all of our team was in customer service last Mother's Day when we had a big snowstorm, or Valentine's Day, and we had a big delay because of that. And we were all at the end of the day, make it nicer, because it gets hard. Yeah.
So what's hard about running a small business right now?
Yeah, I think.
If you need funding, can you get it?
Yeah, absolutely. You can only get it when you don't need it.
That's a good point. That's a good point. Well, do you so how do you manage, I don't know, what's the economic backdrop that you think about for the United States right now? As you said, there's a lot of questions. There's a lot coming at us. I'm just curious, how are you managing for, what kind of a consumer that's going to constantly look for a value? Give us an idea.
I think marketing is actually the hardest thing by far. Getting traffic to your site in an affordable way, cutting through all the noise. You see your inbox. People are sending emails. Some companies are getting 3 a day from.
It's annoying.
Yeah, it is, right? I'm one of those people that's once a day. I'm sorry. We won't go more than that. But, it's trying to cut through that noise with, like I said, our customer acquisition costs. If we could spend $60 or $70, but why would we for a $104 AOV? That doesn't make any sense. And a, 1.7 to 2.2 LTV. We know how much, it's not worth it.
Yeah.
It's just not worth it. So I think the hardest thing is trying to figure out creative ways with limited team members, because you also have to run really lean right now. So you don't have a ton of team members to be able to do lots more partnerships or things like that will actually help you with the customer acquisition cost.
Have you had a chance while you've been in New York City to see any of the bodega flower displays?
No, I have not.
How do they do this? Because it's such a low margin business, but you can still get bouquets of flowers
the delis,
at the
I always
delis.
come to delis, yeah.
How do they do that?
They're all imported. Yeah.
Okay.
They're imported from, and the flower types that are there are ones that will hold up for a very long time. So, if I'm going to use button chrysanthemums, those can be outside of that deli or bodega, you can buy it for $20 and it can sit there for 3 weeks. A David Austin Rose, you can't. A David Austin Rose is going to cost you $2 at wholesale, $1.50 to $2 at wholesale price, which means it's going to cost you $6 for that David Austin Rose. And you have about 3 days. So it's a type of flowers they use. It's where it's coming from. It's the colors that a lot of people don't. If we like peaches and pinks and things like that, you're going to get bright purples and bright yellows and things like that are the kind of the leftovers people don't want. They cut deals to them.
It's not always the greatest colors. There's a lot of carnations in there.
A lot of carnations.
Noted.
Just going to say.
Noted.
No, it's interesting to hear, though, what the wholesale prices of, a great rose or something is, because you realize, when you're doing a bouquet, you're like, oh, my God, but you realize that your cost is expensive.
Really expensive. King Proteas are my favorite flowers, and we get them for about $7. King Proteas, you've seen them? They're awesome. They're from Australia, New Zealand area, South Africa. We have a lot of buying power, but if you were smaller, it'd be $12 to $15 per stem. If you're going to a local flower shop, it's going to cost you $45 a stem for it.
Yeah, exactly. Better get on it.
I know. I know where to go.
You do know where to go. Totally. Thank you so much.
Thank you. Thanks for having me.
Good luck with Valentine's Day.
Awesome. Thank you.
And then comes Mother's Day. Christina Stembel, she's founder and CEO of Farm Girl Flowers. Really, truly one of our favorite interviews. So glad you find time for us. That's going to do it for the Wednesday edition of Bloomberg Business Week. You've got Ford down about 5% in the aftermarket. We're watching ARM also under some pressure. Don't go anywhere, everybody. Balance of Power starts right now.
Politics to the world of business. This is Balance of Power.